Fraser Valley Real Estate just printed a number we haven't seen in years. And depending on how you interpret it, it either signals the market is forming a bottom or that we are not there yet. The latest Fraser Valley Real Estate Board release, one statistic stands out above everything else. And if you understand what that number really means, you'll know exactly how to position yourself right now, whether you're buying or selling. Let's break it down. This is your Fraser Valley 2026 market update for February using official January 2026 data. No headlines, no speculation, just the numbers and what they are telling us. In January 2026, total sales across the entire Fraser Valley were 619. 619 for a region this size, Surrey, Langley, Abbotsford, Mission, White Rock, extremely muted activity. This is one of the lowest volume readings we have seen in years, and that matters more than most people realize. Because markets don't bottom on price first, they bottom on behavior. And volume is behavior. Active listings sat at 7,711. That puts the sale to active listing ratio at 8%. Anything below 12% is considered buyer's market. 8% is not balanced. It's not neutral. It is firmly buyer's territory. The real signal isn't just leverage shifting. It is the combination of low volume and sustained pricing adjustment. The composite benchmark price in January came in at $897,200. That's down 1% month over month and down roughly 7% year over year. 10 straight months of price decline in Fraser Valley. Not a sudden drop, not a panic, but a steady downward pressure. That tells us this is structured correction, not chaos. Detached homes benchmarked at 1,373,000. That's down 1.1% month over month and 7.4% year over year. Townhomes came in at 773,000. That's down 1% month over month, down 6.5% year over year. Apartments sat at 488,600. That's down 0.6% month over month and down 8.2% year over year. Every category is softer, both month over month and year over year. That's broad-based cooling across the board. Now let's connect the dots. Low sales volume, 10 months of price decline, elevated inventory, buyer's leverage. This is what a market looks like when it is recalibrating. When volumes drop this significantly, like 619 sales across an area of this size, markets don't usually collapse instantly. They stall, they flatten, they transition. Buyers hesitate, sellers adjust. Markets slowly work towards balance. That's typically how bottoms form. Quietly, not dramatically. No one can declare a bottom in real time, but we can recognize late stage patterns. Prices have declined for 10 consecutive months. Volume is historically muted. Inventory remains elevated and leverage has shifted. These conditions often appear near the end of the correction cycle, not the beginning of crashes. That distinction matters. Now, let's talk strategy. If you are a buyer, this environment gives you leverage that hasn't existed in years. You can negotiate price, you can negotiate conditions, you can negotiate timelines. You are not competing in emotional bidding wars. But here's the rule. Only buy if the payment works today, not if the rates drop, not if the prices rebound. If the numbers make sense right now, this buyer-leaning environment can represent opportunity. If they don't, preparation mode is strategic. There is no penalty for patience. If patience strengthens your position, just go for it. If you are a seller, the landscape has changed. At an 8% sales to active ratio, buyers have choice. Overpricing leads to sitting. Sitting leads to price reduction. Reductions reduce leverage. The homes that succeed right now are properly priced, professionally presented, and positioned correctly for today's market conditions. Execution matters more than timing. Here's the forward indicator I'm watching closely. When volume begins to rise, while inventory stabilizes, that's when markets typically establish a floor. Right now, volume remains suppressed. 619 sales tells us buyers are cautious, but it also tells us selling pressure isn't accelerating. It suggests we may be forming a bottom or gradually building one, but we are not in an accelerating collapse pattern. And that is a critical distinction. Fraser Valley real estate is not crashing. It is cooling, normalizing. It is transitioning from extreme seller dominance into balanced conditions. January 2026 data tells us low sales, weighted inventory, buyer leverage. 8 months of soft orderly price decline. That combination often precedes stabilization, not chaos. So, is this the bottom? Maybe forming, maybe close. But smart decisions are based on data, not fear. Watch the numbers, not the noise. If you want a clear breakdown of individual sector of any market, feel free to book a call. The link is in the description down below.